Hey, thanks for joining. Today I'm talking about 4 ways to protect your financial self. Accidents happen, whether that be an auto accident, or a slip and fall causing a broken arm, or a tree coming through the roof of your home, or worst of all, loss of life occurs, whether sudden or expected. All of these things happen in life, and we need to have basic protections in place in case these things happen in our life. It can be devastating to our finances if we aren't properly protected and prepared. I'll talk more about this in detail today. Joining me as pet guest today is Arno from Budapest, Hungary. Thanks for joining me again, Arno. Nice, some water fun. The first way to protect yourself is to have cash set aside in a savings account that covers your deductibles. What does that mean? It means that if you were in an auto accident, you would have to pay a certain amount for repairs before your insurance kicked in and paid the rest. This is called your deductible. If it was going to cost $3,000 to fix your car and your deductible was $1,000, you would pay the first $1,000 and then your insurance would pay the remaining $2,000. So many people don't have enough cash set aside to pay for something like this. According to BankRate, 56% of people in the US don't have $1,000 set aside to pay for an unexpected expense. This first basic protection of having your deductibles covered is crucial so that you don't end up going into debt to pay for something unexpected. So, look at all your various insurance deductibles that you have, whether that be auto, home, etc., and determine what your deductibles are for those accounts, and make sure you have this set aside for that unexpected event. Yes, that's definitely an unexpected event. The next way to protect yourself is to have cash set aside for an emergency fund. How is that different from deductibles, you might ask? I would consider an emergency more like losing your job and source of income. How much you set aside in this emergency fund depends largely on how long it would take you to find a new job and what your monthly essential expenses are. Basically, what you can survive on and have to pay for bills each month. If you are in a specialized industry where it could take 6 months to find a job, you should target 6 to 9 months expenses for this emergency fund. If you're in an industry where there are lots of open jobs and it would only take a month or 2 to find a job, you should target 3 to 6 months expenses for this emergency fund. These 2 protections of covering your deductibles and having an emergency savings can bring peace of mind and reduce stress in your financial life. There are some people out there who have 6 figures in their 401k but don't have enough liquid cash on hand to cover accidents and emergencies. If you're in this situation, let's fix that. The third way to protect yourself is to have proper insurance coverage. When we talk about insurance protections, this has everything to do with your current situation. If you are single and no one else depends on you for income, you don't need life insurance. But you probably have a car and are renting a home or apartment, so having auto and renter's insurance makes sense. If you live in the city and don't have a car, then you probably don't need auto insurance. If you are married, now your spouse may depend on your income, and you will want to consider life insurance and disability insurance. You may also have a home and will need home insurance. If you have kids, now even more are dependent on your income where life insurance makes sense. At some point as you get older and your net worth is getting larger, you may need to consider umbrella insurance to protect your net worth from something not currently covered under your home insurance or other insurance policies. So, each phase in life and each situation is different and may require different insurance protections. The fourth way to protect your financial self is with estate planning documents. This would be things like a simple living will, or a bit more complicated like a living trust, and also advanced medical directives, how you want to be cared for in different medical situations. Estate planning documents are all about stating your wishes for how you want your property and assets to be handled upon your death, and/or how you want your medical care to be handled in the event you cannot make decisions for yourself. You should seek the guidance of an estate planning attorney for more details on how to set up these protections. Thanks for joining me again, Arno. That looks like a lot of fun. I hope you dry off before you go back inside the house. And thanks to you for watching. I hope you learned something that you can take action on today. If you like the content, please hit the red subscribe button and the thumbs up like button. If you know someone who could benefit from the content, please share. Take care.